Really excited to be here for Real Vision. It's Mike Green. I'm here with Gontran de Quillacq. Gontran, you are here because we're going to talk about some really technical aspects that happened in the volatility markets and some other markets into the depths of kind of the March crash. I'd love to pick your brain. You can give us a little bit of your background, but just to start off, you're a theoretical physicist, not focused on string theory, but instead focused on volatility, where all good theoretical physicists should be focused. Can you give me a little bit of your background for the audience?
Sure. So during my studies, I didn't know what I was going to do, and I discovered there was math in finance, and I started with an internship that turned into a job, and moved 25 years later. I've been trading pretty much every kind of equity derivatives, from the vanillas to the most complex exotics, half in London and half here on this side of the pond. I traded both sell side and buy side, so hedge funds versus banks, and prop as well, customer oriented. I also probably invented what is now called risk premia, because I was the first to package investment research into derivatives. So customer request as well as research input strategies. We did that at Lehman Brothers in London in the early 2000s. For the last few years, I've been changing hats. I was an outsourced CIO selecting portfolio managers. I am an expert witness. I mean, I work with attorneys trying to understand cases when there is a loss or somebody who has done something they shouldn't have done. And I am also a financial trainer.
I wanted to focus on that for a second. So now your firm, in terms of the expert witnesses, is Navesink, correct? Is that correct. Your...
Navesink International.
Navesink International. And so Navesink focuses, you've been involved in broker client communications or litigation. You have been involved in discussions on policy or regulatory issues. One of the things that brings up is this issue of education, right? So people understanding what they're trading. And you mentioned that you played a critical role in the construction of many of these products that have now made their way into the retail space. When you think about that dynamic, that issue of disclosure, that issue of understanding, how do you think about it as a practitioner and a professional that these products have now made it into the retail space?
Well, there's a lot of different products. So I would say there's a question of suitability behind it. The suitability means a registered investment advisor or an individual should not trade a product which is beyond his knowledge or expertise. So some of these products are fine for retail. I mean, the ETFs, I was one of the first guys to quote an ETF. It's a very standard product. But when you go into leveraged ETF, or when you go into strategy derivatives, when you go into volatility, I'm not convinced mom and pop should be trading options. I've seen plenty of cases recently, February 5th, 2018, or option sellers later in that year, where individual was selling puts on a regular basis, led to retirees losing not only 100% of their saving, but actually, because he was in an SMA, were being called on margin by the broker dealers. So you can lose a lot of money by trading options. Options are complex and leveraged instrument. You should be very careful about this. Now, there's a wide range of product. There is a demand for product which have a quantitative content, because quantitative strategies tend to